Watch a prop trader on our desk mentor a beginning trader on a trade. Walk away with a better understanding of how to construct a trade, review a trade, and execute a trade in this video. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account. We had planned for me to sit as the mentor for this playbook, but I've noticed Brian and Mally huddling up quite a bit on our trading floor and talking trading. So I thought it would be even more fun for Brian to play me during this playbook and provide the mentoring because these two traders have formed a relationship. Remember, your playbook is how you build your trading business. It's your job to execute your playbook in real time. Brian is closer in his development to Mally than I am to Mally, so Brian offers a unique value for Mally with his mentoring. Brian's a third-year trader, sits on Team Swang, and trades as both a discretionary and automated trader. Also, it might be fun for the trading community to see someone who used to sit in the hot seat with me presenting a playbook become the mentor. The former student has become the teacher in this playbook. As Dr. Steenbarger encourages, each one, teach one. In this playbook, you're going to learn the importance of 1, understanding how each variable affects your trade. 2, deciphering which variables are just noise. 3, matching your trade execution to the trade idea. Okay, let's get to it.
Today I'll be filling in for Bella. He asked me to do a little mentoring session here with Molly. To give it a little idea of my background, I've been trading for about 4 years now. Been with S&B for 2.5 years and trading live for about 2 years, and then full time like post grad for about a year now.
Okay, so I'm gonna do a trade to hold playbook today. This trade was happened last week, and the ticker is John Deere. So before I jump into it, for the big picture, debt ceiling talks are happening right now between McCarthy and Biden, and the market is responding to that positively. As a matter of fact, if approved, the government will be able to spend more, which is positive for the market. Inflation is stabilized, but not achieved 2% goal yet, so we are somewhere in the middle. AI theme has been hot, and many companies and funds pouring money into AI development projects. As far as overall markets, Qs hit 50 weeks highs, the DAX hit all-time highs. We are seeing a base action on IBM and other small cap stocks. SPY and Dow Jones has been relatively weak to the Qs, and they are still in the range. As far as John Deere, big picture, it's a company that specializes in manufacturing agricultural, construction, and forestry machinery. They reported earnings beat EPS and revenue. However, market reacted negatively. The main reasons: the consecutive decline for tractors, and potential decline in the sales because of their overproduction in the current quarter, which indicated next quarter sales expecting 10% lower, which they spoke in the earnings call. I graded this -9, especially their comments, and overall earnings was -8.5.
So what is that score?
So Jeff asked me to score the catalyst individually too when I present. So I am scoring how important it is to me if I hit the bottom. Like it was pretty bearish to me, because usually in earnings call they tend to present more optimistic than even if it's something wrong. I don't really hear, yeah, we are expecting less percent, like something negative. Like it was very bold, and there was a bunch of uncertainty the way they were explaining.
Gotcha. And this is out of 10 score?
Out of 10, yeah.
Okay. So you already know, like, because we talked, right? You already know what I'm gonna ask you. And like before I go into it, like for one, this is like really, really difficult and like you're new. So like don't like this is not an expectation by any
Yeah, yeah.
means. But like I guess friendly advice and the way that like I see trading, right? Is that you need to know where each like how each variable affects your trade, right? So when you say this stuff, like it sounds really good in a presentation and like it looks good and like clearly like you did a lot of work and you did a lot of background. But like to me, if I'm trading something and someone tells me like these things, unless I can actively attribute it to like how I'm going to execute or like how I'm going to approach the trade, then it doesn't really matter, right? Then it becomes just like fluff.
Yes. Yeah, I agree. Actually, this I went to the news and heard this after fact when I was trading. I agree. This is good, but if the market is not reacting or if there is not much variable, this is not enough for me to trade. This is just catalyst as just individually just grading. That's what he asked me. Like I have each grade for like different components. This is just for that comment that I gave a grade. So this is not like my trade reason, basically.
Okay.
Yeah.
Okay.
Okay, so for the chart analyst, for the SPY, we've been ranging. Last week Friday, we made about 414, and we were able to hold for first time in that 10-week range, and closed at the highs. However, we are back into range this week, so we are still in the range environment. Important resistance levels 417 and after that 431, which is 52-week highs, and important support areas is 404, and then after 404 we have 380 on the daily chart to consider as an important support areas. So big picture for the John Deere, we have been topped up at 448, and after that 440 acted as a strong resistance. And stock has been performing slightly off compared to the other stock in the same industry. So what I did was I took a year-to-date return for stocks in the same industry. On average, it's 4% return, but John Deere has negative 3.13%, and the stock has a beta of 1.03. Even though we've been ranging in the SPY, the stock has been downtrending. So with this type of beta and then this type of negative sentiment, I also graded the big picture negative 7.5 to 8 areas as far as how the stock is trading rather than overall market itself.
So when you say these grades, right?
Yeah.
Like 6 means something different from 7, right? Means something different from 8 and
Yeah.
9. Like
It's
that,
the importance level.
so does that affect risk? Like what does that directly correlate to?
So stock is trending more down, it's more negative. So if I'm gonna hit the short, coming in the trade prior, the stock already has been weak. If the stock was an uptrend while SPY was ranging, that changes the way I'm looking at it. Beside the trade itself, just for the big picture, the stock is weak to me. So if it is weak and if I have bad news, it is more comfortable to trade on the short side rather than if stock has been uptrending for a while and hit the short. Of course, if the news is so great, I will hit the short anyway. But this is just a component to me that this stock is relatively weak in the industry and relatively weak to the market.
Right.
That is the pure grading.
So the reasoning behind the grading makes sense to me.
Yeah.
But my question is then like what does it correlate to, right? For instance, like if we say something like, oh, it's a risk, right? Well, that correlates to maybe like 50% of my stock in that moment, right? Something is B risk, maybe it's like 5%, right? Whatever value, like those are just arbitrary numbers.
Yeah.
But like what does a score correlate to?
I see. For me, below 6 is not considered to even think about trade. 6 to 7, keep an eye on. 8 is I'm gonna put size if it comes to the areas that I want. 9 is like hit it, and 10 is hit with size. That's how I grade it. Like, it's arbitrary, like you said. It's just because it's 10, I'm not gonna like hit it in a moment. I'm still gonna wait for time to come.
Yeah.
But like if the grades overall are between 8, 9, and 10, then my overall trade idea is gonna be more size in and more aggressive, because each of these components I trade is like between 8 to 9. If there are sixes in the way, then I will be more cautious hitting size. But if everything lines up on my favor, then I will hit size. Like I guess that's the main component of grading.
So do you have like a rubric for this?
Hmm?
Do you have like a rubric for like?
I don't
oh,
have
this
a
kind
written
of-
rubric, but in our AM meetings, that's the way we approach. Like 10 hit with size, 9 like below 6 we don't even grade it. If
Yeah.
it's 7 we talk about it, but like it's not really on the radar. We usually put on a radar if it's 8 or above. Then like, okay, this is like really in play. I'm gonna watch this.
Mm.
Yeah.
It makes sense, and I think like it's a great practice. Like you said, Jeff mentioned it. Like that makes total sense. I think like that's a really good
Yeah.
best practice. I think like something that could help improve it is, I just think for me, right? Like,
Yeah.
I'm someone who is like, oh, like I'm very in the moment, passionate, but I also like because of that I try to keep things quantitative because I know me. Like if I walk in one day and maybe like I'm pissed off, I'll be like 8, right? If
Yeah,
I like
yeah,
feeling
yeah.
good, 10, right?
Yeah.
Like, and I just think like it's so easy to do that if you don't have like quantitative measures of like what allows for an 8, 9, 10 versus like when like we talk about something, right? Like we as in like the guys I work with,
Yeah.
if like he tells me like, oh, this is like A, right? I know like A correlates to this risk value, and I can like confidently say these like 4 or 5 variables are all there because like he wouldn't even say A to me if those things weren't there, right? So like it means something. So then real time when you're like executing it, everyone is on the same page because
Yeah.
like it's so hard to outline.
Yeah, I understand. I think I do the same thing on an intraday like trade action basis.
Yeah.
I just didn't do it for like the bigger picture ideas, because the bigger picture is not gonna decide if I'm gonna trade or not. This is just for the like component sake that if I am considering what is the bigger picture, I rather put a grade on it so I know what is what. But if I'm actually gonna put the trades, then yeah, we do grade more quantitative based. Like, is it on the important resistance level? Is it gapping up above that? Like, does it hold? Like, we go more in deep when the time comes. But just for now, for bigger picture, there is really not much to grade on besides it is downtrending, it's in the range, and it's weak to the relative to the sector. And the more I deepen down, then yeah, I will be more specific. I think just for the bigger picture sake, that's the reason I graded just based on these two.
Gotcha.
So
Yeah, that makes sense.
in the future of the presentation, I will show, as far as in the reading the tape and stuff, how I will.
Yeah, I
approach it.
don't think it's so much a matter of presentation.
Yeah.
The presentation.
Yeah. No, I agree with
your
you.
presentation's mad nice. Like,
No, thank you.
that's
I agree, and this is one of the things that I learned actually here. Like, you really have to be specific, especially like when I trade, if I'm going to trade.
yeah.
This is Jeff. I've been listening to this very awesome conversation and just want to provide some color into the background behind what we're trying to do here.
Yeah.
And you know, you guys are talking about something that is in the maybe second inning of something that we think could be very powerful. And it's the combination of the catalyst and scoring the catalyst, then the setup and scoring the setup or the levels or the support and resistance areas. Those all kind of incorporate that setup, and then scoring the trading opportunities. And that dynamic ability is what ultimately leads into that discussion of that you were so astutely pointing out, which is just how do we come in and protect ourselves from saying it's an 8, it's a 9, it's a 10,
Right.
and misallocating our risk. And how do we do it from both directions? How do we make sure that we're not under allocating in the things that are really important to be aggressive with? And how are we setting the tone for ourselves to make sure that we're allocating risk appropriately to the big opportunities and stepping way back for anything that's not?
Right.
And so what you asked was such a powerful concept, which is, okay, what does that mean? Specifically to you, what does that mean? And that is kind of that third inning that we're getting into. We're getting into the meat of, we've had this moment where we felt it out a little bit, and we've been through the rotation one time. Yeah, everybody's gotten an at bat, everybody's tried it a little bit. Now we're at the point where it's really important for us to figure this out with a lot of specificity.
Right.
And Kurt has this list that we've created, which is very important, right? These are just a scoring. The next step for us is to articulate what variables go into each of these scorecards.
I see. Okay, yeah, that makes a lot of sense.
It's such a cool thing, but it's so early still, right?
Right.
Yeah, this was I was talking about, like,
Okay.
if we're gonna trade, we have this one on the 4 a.m. meeting. Like, if I'm gonna put the trade, then I need to dial in more to like really see, okay, what am I actually grading? What are my reasons? And
Yeah.
what is the size?
Yeah.
And I'd love to hear your thoughts as somebody who's traded. And I believe this is a best practice we have on the desk. We've never just standardized it.
Mm.
I think in our teams, we're talking about it a lot, but we've never come up with a way to be dynamic about it other than just get a lot of experience.
Yeah. I think broad desk, like truthful, I think it's really difficult, broad desk to do that, because like what might be a very important variable for me might not be a very important variable for you. And like that is completely predicated on like how you execute, right? Like your time frame or your execution system, maybe you're algo based, maybe you're not. Like I
I
think,
agree with that. That is exactly why it is so important to take this.
Mhm.
And, we can teach the fundamentals that we do early, but
Yeah.
then each person is going to have to come up with their own system.
Right.
And not really each person, more each pod or each type of trade. Because those variables are going to be a little bit different. And they're going
Right.
to have that nuance, which is what equates to edge. It's
Right.
your understanding and your respect for what the variables are that is really going to dictate how much edge you have
Right.
or alpha you can generate from those. So yeah, it's like, the standardization across the desk part is just having a process in place.
Yeah,
The real part comes in from each individual. So Molly, like, if I were you, I'd be writing down, okay, I really need to make sure I know if I call out an 8 out of 8, why is it an 8 out of 8? Is it because it's had 2+ tests there? Is it because of this? Is it because of that? These are simple things to do that will evolve over time, but they can become really powerful.
Yeah. I mean, like, to go like not seem so harsh, like you for like what 1 week in, I could have never made a playbook like this. So you're totally good. The level, Jeff, it just keeps going higher.
Standards are getting so much better.
Yeah.
And that's the most exciting thing about our firm is we keep pushing ourselves to do better and better and better. And the thing that's the most surprising to me, and you're a perfect example of this, is everybody on our desk is capable of doing really elite level work. It's just, sometimes we need a little push here and there to do that. So
Definitely.
I've been more surprised to the upside than I can even count the number of times. And something like this, what we're seeing with Molly today, is exactly that. So
For sure. I feel like everyone I work with is smarter than me, and that definitely helps a ton. So
sorry for interjecting. I just want to talk about, it's become a passion project of mine to get these not standardized so that everybody's looking at the same variables, but standardized so everybody has a process. And so they can learn faster and they can move forward faster. And so we can avoid having people spend time trying to figure this out all on their own every single time we have a new trader. And more just, oh, here's a process that you can use. Here are people that have come before you that you can follow. And so this is really a passion project of mine, because I see the edge in it. And I see how, one of the most frustrating things as a trader is under risking in a really good setup or over risking in a really bad setup.
yeah. I mean, we talk about that all the time. Like, I mean, you and I have talked about that all the time. Of like, there are guys at the desk that do it at an absurdly good level, that like I strive to chase myself. I think it's a really cool project, and it's like you said, right? It's the exact way that we go about thinking how to build alpha. Like, it is the early stage, but with anything, like if I want to build alpha in a brand new space that I don't understand well, like it's going to be really like broad to begin with, because we'll start with massive data sets and then just like start coming out with potential ideas, and then how can we like either discretionarily or statistically quantify like whether this variable works or there's any correlation. But it starts with like super broad and like a bunch of random ideas tossed out there, and slowly narrow down, and being more specific, more quantitative, like as time goes on. So makes total sense.
So after the big picture, I just wanted to add VIX there, that the VIX is trading at lows, and that indicates the low volatile environment. This also doesn't really affect hugely my trading, but I like to know where is VIX at, where is the general market environment, how are we trading, are we super volatile, is the things are bouncing, or are we in a fade environment? Like this is like mainly sensing the environment that I'm in rather than giving a trade decision. So this is the short-term technical coming into trading day for John Deere. Nothing really special. We were ranging 373 and 374 rejected multiple times. We flushed down to lows. 362 held twice, and then we head back to the top in the range in the next day. And the day prior that we were coming into trading day, we just ranged. There's not much action coming into the day of the trading, which was earnings day also. So 366 was an important support area. It held twice, tried to break, reclaim, gapped up, and then we held the next day. Coming into earnings day, we gapped up right above the resistance area. So I have two indication coming in today. If you get a strong open held above 390, I can look for long, and I graded this 8, and my reasons are, so now I have to be more specific because I have the levels and everything. So the reason it's 8, the 390, there's a double top rejected twice. So if we gap above that, is the sellers are still there or not? If we gap above, still hold, that's a good indication, and then we kind of continue from there. And if I can get a spot, then that's a trading decision that I would like to take it. Why it is not 9 or 10? Because the 390 is not that important. It's not all time. It's just a range level that is just gapping up above there. And because we have earnings, I figured that was my grade. The 8 was enough on it. And the same, if we get the first move up and Regia get back into range below 390, then I can look for short from the same thought that I just gave an 8 catalyst, because if the sellers are still there, yes, it's a earning day, but we are gapping right above the resistance, I can get a really nice killing fade. And VIX being low and this stock is being relatively weak, on the short side, I can get a nice job on a trade. That was my thought coming into on the technical and the intraday.
That's a daily?
This is, yes, that is daily. Yeah. So my trade strategy, we have fresh earning catalyst. I'm waiting for initial down move with high volume, wait for the trace when I short into pops. So this strategy is what I actually traded, not what I was expecting. So so what I was expecting, hold about 390 or first move up, didn't happen. The one that I'm doing, it was in my playbook. Basically, I get the first initial down move, wait for some type of pop, and then short into that pop, and then look for fade in the afternoon. So it's a completely different trade that I took.
Wait, help me understand that. Like, you planned one trade.
Yeah.
Wait.
So I think I understand what I'm saying.
Yeah.
This slide right here, this is in the morning when we gapped up. Like, market is not open.
Yeah.
We are gapping up at 390. Those are my two thoughts coming in today.
That you're going to short 390.
First move of 390. That's like the most ideal that I see. But coming into trading day, I didn't like what I see, so I didn't trade in the morning. I traded after the fact. It was like 10:14 in the morning. When we get a really nice action, it was completely different trade. So I just shared my thoughts about the setup and everything, but the trade I took is different.
Maybe this is like a pure preference thing.
Yeah.
Me personally, like, if I had that expectation, didn't come, I just wouldn't trade.
Yeah, I didn't trade either. I just traded like after 45 minutes.
So-
Something really came up like 10 out of 10 to me that I know with the setup I need to trade that.
Got you. Okay.
Like it was maybe 2 different days. Like this is an earning setup that I was trying to play. The trade that I took, I almost take it like a breaking news. It was like the way it was moving, it moved full ATR in 3 minutes. I'm like, this is a completely different setup. So
Okay.
yeah.
Got it.
So as I see, initial move down, high volume, wait for retracement, short into pop, expecting for continuation, high volume in the breakdowns, and I'm expecting low volume in the retracements, which indicates more size in the downticks. Due to high spread, I'm looking to offer high and cover near low of the trade around my core and make up the spread, which means that since the spread is so high, if I don't get the spot that I want to, and if it's breaking down, I'm not gonna hit with my full size, but if I do, I really want to offer somewhere highs and then play around it, because it's not like a stock like Tesla or like Microsoft is spread is so low. It's a kind of speculative idea. Do I need to do that? I don't really have to, but the way the trade played out, I just saw there are like 40-50 cent scalps that I can trade around my initial idea, so I also did that.
So you're shorting the offer. Like you're let's say you're risking like $1,000 or whatever.
Yeah.
Right. Like $100 in the trade, and like you're risking it to like what, like high day or something, right?
Yeah, I will also explain that in the reading tape, but
Sorry.
my risk level wouldn't really change. I'm just adding more size and I'm risking more. So basically, when I enter the trade first,
Yeah.
my risk is different. And when the trade is merging and I like the setup, I just add more size. And I move my risk down if the setup tells me to do, or
Okay. Yeah, that makes sense.
yeah. But the spread thing I'm explaining, I
Yeah.
shortened the offer first, but into the breakdown I hit the bid because the way we were breaking down.
That makes sense.
And in that moment, well, I hit the bid, the spread is high. Do I really need to hit here? Can I just cover and then short at the highs a little bit? So it was really speculative, like 30-second idea that I just created. I just wanted to add there as a note.
So what happens if you sell the offer and then it turns around in that moment?
That is the risk that I took, because I sold the offer for my initial short, because I want exactly in that area. I don't want to hit too low, but I hit the bid
Yeah.
in the breakdown as my second execution.
Which makes sense.
But we didn't break down. We kind of came back up. So on the next breakdown, I cover, and then I short slightly higher, because if we were gonna break down with a high volume, we will break down in the first moment. And I'm realizing in my second breakdown, I'm like, okay, this time I'm not gonna hit the lows because we are breaking down, but we are still in a range. So if you're gonna range and if you're gonna fade, I rather shorten a little bit higher than that, basically, which I will go over.
Okay.
Yeah. High institutional ownership and being the low float being low, it just indicates me if the news is bad, how hard this can sell off. If the short float is high, people are gonna start covering, and if there is no institutional ownership, like how aggressive can we go because of the selling size? So we have high institutional ownership. That means if people wanna sell, I can see institutional selling, and the fact that there is not much short float, people are not gonna that much cover, so I can really get a clean fade trend day. And we were trading 7x R-Volt, which is an important indication that the stock is in play. Those are the three things that I like.
Okay. I'm just gonna push back just for a second here.
Yeah.
Like, devil's advocate.
Yeah.
Like you say, low short float is a good thing.
Yeah.
Because if they were short, they would cover. But if I'm short something and I got really bad news that I think the market is mispriced at, I wouldn't cover it, right? I would probably add.
Yes, but I like that. I like if you adding, that's in my direction.
Right,
So,
so-
I'm gonna keep my trade.
No, 100%. I was just saying like you're saying low short float is a good thing, and it very well might be, right? But like without proof, it's really easy to make the counter argument that like, all right, I'm short. Like let's say I'm an institution, right?
Yeah,
like,
yeah.
like things go really well
Yeah,
for the next
yeah,
30 years,
yeah.
and I become an institution, right? And I'm short something, and really bad news happens that like. For you to short this, you're essentially saying the market is mispricing it, right? Like,
Yes.
and I think it's mispriced. Like I would stay short, or I would only add. So I don't see why like a really high short float is necessarily a bad thing in this instance.
Yeah, I think it's just me learning in SMB and putting important stuff. Having a high short float always, it was a lesson that it made sense to me also. If it's a short float high, do I want to look for trend day, or am I going to anticipate people are covering? Do they have to cover? No, I will never know that who is going to cover, when they're going to cover. It's a kind of speculative idea, and it's not like a trading decision idea, but I prefer short float to be low, because like, let's say if short float is high, I don't really want to short this because the squeeze potential is higher. So I'm just judging based on the potential. It's not
Okay.
like a definite
No.
argument. Yeah.
That's a good argument. That's a good point.
So having a low short float, just a potential that I will have high likely better get a trend day rather than high short float.
Okay. And then the high institutional ownership, why does that matter?
It matters, like, I want high institutional ownership. I don't want too much retail, because the sizes matters, and if institution wants to get out, they can affect the stock price rather than retail affecting. Like, retail gonna sell 100 shares, institution gonna sell like maybe 100,000 shares or 10,000 shares with blocks, and if they really want to get out the stocks, then that can affect the stock price heavier than just retail want to get out. So that's also positive catalyst for me.
Got it.
Okay, so this is an intraday technical analysis, and I have the trade management after that. So we got first move up 392, unable to hold. We got a retracement 388, and conference call starts at 10 a.m. and at 10:13 we get that flush into new daily lows.
Oh, your trade is during the call.
Yes.
Oh, okay.
But-
So that's why you said it's a breaking news. Oh, it basically is breaking
Yeah,
news.
yeah, and then after the initial flash, we get a 5 minute range, and at that moment, I have a trading decision to make. Am I gonna play the bounce, or am I gonna short the pop for a fade? I'm gonna get into more details. I rather get into reading the tape and the trade
Yeah,
management. I just want to go over the technicals right now. We were unable to bounce. We flushed on, and then we rebit. We get the tight consolidation. And after that, rest of today, we really just trended. There wasn't really unusual beat or anything. It was really clean trend day. As far as technology, the thing that I built this last year when market was more volatile, that basically what this scan shows me is that I want to see like some type of extended move in the stock, 3 bar or higher, goes in one direction with volume. And right here, like this one, I want to see this type of extension moves in a row really quickly. That it's either gonna sharp bounce or some type
These
of
are
news.
1 minute bars?
Huh?
These are 1 minute bars?
These are 1 minute bars, yeah. So as you can see, I got involved with this in the third big candle. Yeah. So that's the reason that I use this scanner. And another technology use that I use this scanner for, two other way I try to play with. If you are ranging and if it's a clear range, just really up and downs, and if you come to the lows or if you go to the highs, really like in a row of momentum and then just turns low. This is one way I just range scalp it. I wait for tape and volume to confirm and then ride into highs in a slow day environment. The other one is a kind of momentum scalp, first initial break, and then we consolidate. And if you're heading to lows, I just momentum scalp like 30-40 cents into new low of today's and cover near lows. Very specific trades. I don't really trade these type of things unless everything adds up, because I can just show you like maybe 100 stocks each day trading like that. So I need like some type of volume. There is a really clear change in the tape, because I'm not trading everything comes to scanner. It's really like, for example, the momentum scalp you see on the right, like the way it's coming down, there's two lows and the volume is increasing right there. So my probability of we might hit the new lows or like we had to higher in that moment, my judgment, like based on intuition, is higher. So that's another thing that I use my scanner for that. This is just an
And then
example
what kind of stocks are these?
I think the right one is Apple. This one was just popped on my scanner that I traded this APA, but this one was Apple.
Yeah, I mean, okay, I see this a lot. And the reason I'm saying this is because I've done it before. Like, I've done the same thing before.
Yeah.
It's like, when you try to momentum scale, I don't doubt that there are people that can do it.
Yeah.
But they're very specific, right?
Yeah, very specific.
And like the reason being, like something like this is incredibly efficient, right? If you're taking liquidity, like you're going against like the top market makers in the world, and like they are profitable vast majority of the time. Like people who take liquidity are not. Therefore, if you are taking liquidity in something like this, you'd have to have reason to believe like something's going to continue far past like tape, I think. Because I don't know, to me, like something like Apple, like maybe a couple times a year, tape really matters. But like, that's just also my opinion.
No, I agree with you. I definitely agree. I wouldn't trade it. Like I think the reason I put that specific example, like the people who longed at the lows, we got another pullback, and there is a really small tight range there, after the second low. Do you see what I'm talking about? Like the day low, and then we got a pullback. This is the low, and we try to get another one, and if we can't, so before this move happened right here.
Yeah.
We get a really initial down move. So right here, the bias is really okay. This probably gonna go bounce. It wasn't able to hold the. It wasn't able to break the lows. But we really try again, and this time we break this low. So I'm like, what are the probabilities? Everyone who long this is underwater, and is this an enough range to take their stops out and then really not hit the new low of the day?
Who's long that though?
Huh?
Like who's long?
No, I'm interpreting my speculative idea, like how I will take the trade, and I'm like, this is also really just technology usage.
Right.
It's
okay.
not
Sorry.
really like
yeah.
I wouldn't
sorry,
like really.
Sorry.
I wouldn't like really actually put size and take it. It's just an example, like the way I will take it. I was just saying, like, if people are long, there is really too low. Like, what are the chances? If the tape is good, volume is good, I will just take it as a momentum. That's what I was saying. But we can move on. Okay, reading the tape. Before we go on, the conference call comments. I also graded these. The demand for tractors decrease, resulting inventory levels to rise. When they say this, they're expecting the demand is decreasing, and inventory levels are rising. I graded this -8. It's just a bad news. Is it a horrible news? Like we are in a recession environment that demands are decreasing and people know that. So it's not 9 or 10, but it is a bad news. So I graded as 8. Expecting 10% less revenue in the quarter. This started the move at 10.13. I graded this -9 because, as I said, they tend to be more optimistic than it is. And if they are actually accepting and just saying boldly, yeah, we are expecting less revenue because the demand is decreasing and things are uncertain, then it is -9 to me. And they also talk about uncertainty about corn production and farmers. I put it there because they use the word uncertainty and they use it a lot, and market doesn't like that word uncertainty, so I still put it there as -6. So we really, it's just a pure momentum. We didn't really stop yet. So this is the first time the 3.7 to hold it. I'm like, okay, that might be just the first bidder just coming. And we're gonna hold for the second time. I don't know what's happening. Okay, so that was the, let me go back. So 370.49, we hit 370 again, fourth time. So we spent like 8-9 seconds there to try to take it. We couldn't. And right now, if I'm gonna go long, probably this is a spot, but like giving the stock the way it came down, I don't want to long this. I'm really looking for some type of pop to really get involved. And right here, I'm thinking, okay, if 370 is holding, what was the range that I can kind of judge the 3 big candle, and this candle we started to get some type of action. So if the buyers are there, are we gonna really bounce, or where I can short this? So I'm thinking this 375 level where we were unable to go higher, it just picked up, and these are the sellers, these are buyers. So I'm really looking for somewhere here to really get short. As far as EV, I don't want to really hit it down here because we already moved whole ATR from the move. So I'm looking for pops to short it at this point. $3.72. So right here I get executed.
You just had an offer up there?
I put it. I waited a little bit, then I shorted like right here.
You just took the bid, or you took?
You see, like we try one time and then again and second time.
Yeah. So
I took after the one time we were.
did you
unable
take the
to-
bid?
I took the bid. Yeah.
Okay.
I hit it right there. I just want to go back really quick to show. So that was the one, and the second time we try. Take out the 375.
And your stop is
Huh?
your stop.
At this moment, my stop is basically right above that. Like, but I don't want to get wicked out. So my stop is basically candle close, and if we bounce second candle, if we get above 377.50 area, then that was a bounce, and I was wrong. But I don't want to get wicked out, so I didn't have really tight stop above 375. Just a little bit more above that to prove me that okay, we are bouncing.
And then, sorry, remind me what the thesis of your trade is. Like, why are you short?
Thesis of my trade, we get full ATR move in 3 minutes there in their conference call. So if somebody is selling this, and if we get a continuation move, my thesis is this move has a continuation, and I want to get involved with the highest price possible for the best EV. So I wanted to short in a range that I have been giving, which is 370 and 375 in a 1 minute chart.
So that part makes sense to me.
Yeah.
Why cover at 377.50? Why not short more?
Why not
better
short more?
price.
Because first, I just have in my trading career, I guess I'm not in a level to like add to loser, and second, my thesis is all wrong if we go there. I will not short more because if we are if you're at 377.50 from 370, that's like $7 bounce on a $10 move ATR. So that's a bounce. So we bounced. I'm wrong.
I mean, we just moved like what, 15 points, right?
Yeah. So if we bounce like
So we bounced
7 point, yeah, you're right. Can I short that? Yeah, but my thesis was I am betting that this seller right here is gonna hold, because if we go high here and I add, like there's a chance we might go to 380 then, and
It's true.
in that position that I was wrong, I added the wrong idea, that my thesis just wasn't there. But you're right. There is another way of maybe I should have traded that way, just like put a half size right here and keep adding for the idea of we are gonna fade in the afternoon. I'm just like the way I said, like I'm trading this as breaking news, like I'm expecting the action to be right here and then really go move down.
So really, your trade thesis is 375 seller holds.
Yeah, 375. Like I'm betting this range will hold, and we're gonna go down from here because my sizing is enough right here.
Right.
Yeah.
So, like, I get it. It
Yeah.
makes sense.
Yeah.
But then I would say then your trade isn't continuation on the news. It's 375 seller holds.
I mean, they are both. The 375 seller holds because there is a news, and if that, I mean, if people are selling that bit, I'm just thinking because of what they heard. So I don't know what price they want to sell. I just assuming the reason is this, and it should help. Is it 375, 376? I don't know. I'm just judging based on whatever I saw in the chart. I'm like, okay, 375, because right here, like we hit here and then we hit here, and they both hold. And these candles are really thick candles we just sold off. There is like really nowhere for me to like judge. Maybe if I was paying more attention, like, oh, there were really momentum sellers there, that I can get an idea from there. But beside that, I don't really have any clear idea except we get into this range that I'm like, okay, 375 should hold.
I get it.
Yeah.
I just like this is like my perspective.
Yeah.
And like again, it's probably only because I don't trade this way.
Yeah.
Like to me it's like it's almost too pretty in like a weird way. Like
Yeah.
it like sounds good and it like makes sense when you say it, but like the best trades are not gonna look like that. Like you know what
I
I'm saying?
agree. Yeah, no, I
Like,
agree. And we were talking about that.
Yeah,
and I
yeah.
talk about like when Shark said like you have to be uncomfortable when you enter.
Yeah, yeah.
That's
exactly.
why I wanted to enter right there. I wanted to be a spot that I'm uncomfortable, where the people who's gonna buy this for bounce gonna feel comfortable. And in this candle, after this momentum right here, that was the most uncomfortable top of the range. Is it gonna bounce? If it's gonna bounce, will people chase up here?
So that's where I just disagree. Like
Yeah.
I like maybe it's that I'm not familiar with this catalyst, right?
Yeah.
And maybe you're totally right that for this catalyst, this type of stock, like it holds lows like that.
Yeah.
But to me, like if I were trading this and I wanted to short and I thought like, all right, this has a lot of legs lower. 377, I'm shorting more. 378, I'm shorting more. 379, I'm shorting more. And I'm coming in with that game plan. So if it turns around at 375, then I'm like in baby size, and that's fine. But like,
Yeah, but I think then let me ask you this:
yeah,
for the trades that works for you, then
yeah.
there is a chance your winning might be baby size and your losers are full size because you kept shorting. And if you're gonna lose, you take the.
I'm not
big
saying
blow.
like I would take this trade, right?
Yeah, no, I'm just like thinking because I did think about that. I'm like,
Yeah.
well, what if it bounce more? I wanna short more? But like, just I think in the long run, if I'm right, I wanna be right in full size, and if I'm wrong, then sure. And also,
But that's just because like that sounds good. Like a lot of our trades. So we're working on a trade right now.
Yeah.
And like this idea comes to mind very well. Where we allocate a max amount of risk for this
Yeah.
trade.
yeah,
It doesn't very rarely like
Yeah.
are we in that max amount of risk, right?
Mhm.
And the reason being like I can't predict what triggers are gonna occur, right? Like I can have a list of okay, this could occur this way, this could occur that way, this could occur another way, and each one confirms my trade. But like if I just commit to one trigger, then like it doesn't make sense because it doesn't confirm my idea. So they're essentially what we perceive to be positive EV spots that allow us to execute this trade. And a lot of times like you're not in like full size of a winner. But that, like I don't care about that because your goal is to be profitable trader, right? Like that's it,
Yeah.
right? Like can I make money and can I scale? And like those are the only two things like I'll ever think about. And so like wanting to be in full size in your winners, I'm saying this because like even when I was scaling at a point
Yeah.
where like I was scaling very consistently and we were getting like stop bumps consistently, I look back on the time now and a part of it makes me go like, oh, like I was lucky, because like I wanted the same thing. I wanted to be full size really early and I wanted to be full size in almost all my winners. And so like I was coming at the trade from that perspective, right? And that's what I was weighing as like really important. But like what does that like affect? That affects your curve fitting your data, right? Like and then your curve fitting your execution system to only account for your winners. And so when you run it on an unbiased data set in a large enough sample, you're gonna realize like shit, like I'm gonna lose a lot. And what happened was like we would give back a lot of P&L because of like stuff like this where I would be like, oh, the 375 seller needs to hold. And it makes logical sense if I tell it into for like a room full of traders, they'll be like, oh yeah, that makes sense, right? But if I'm gonna commit like my trade to that seller, sometimes he's gonna work, sometimes it's not gonna work, and it's gonna be really hard to scale in the long term.
Yeah.
You see what I'm saying?
no, I agree what you're saying, and that's why I told you that it's like it's not 375. I'm betting it will hold, but I'm not gonna cut it if it doesn't hold immediately. So from that idea, I'm betting the probability of what are the chances we're gonna continue, what are the chances we're gonna go. If this was just a regular day, there's no news, nothing, just SPY is coming down or like any market name, that I will probably look to bounce, right? I'm just betting in a probability of these news comes or the talks, whatever they hear. It started the selling, and it's negative. If they want to sell it, okay, where I can put my size in the highest place. If it goes to 377,
Yeah.
I am wrong. I don't want to short it more there because whoever sold these, whoever sold right here,
Yeah.
like below 377, they will want to short more there because they want to get rid of the stock. Like if I'm an institution, let's say down in 30 years, I did very well. I want to get out. If I'm letting this go above this 377 and I try to get out of my size, that means I'm done selling. Like I'm done selling. So this is a bounce trade at that moment.
I don't think that's true.
Like then elaborate a little bit because I was thinking
Yeah.
that like if like right here we were getting really
Like-
heavy sells.
I think like one, it's hard to say because you don't know the fund, right?
Yeah.
We have someone at the desk like who has been around for like a long time and worked at like macro like big
Yeah,
funds.
yeah.
And I've heard this from a few guys at that level that have been around like trading for like way longer.
Yeah.
Right? Like,
yeah.
And they talk about how like these funds like sometimes when it takes them a long time to get out. Like there's no way they can get all their liquidity out in an hour, right?
Oh,
like that's
absolutely, yes.
like
And I think
so
that they have a rule that they
if
can
we-
sell more than a percentage
Sure,
of the
yeah,
volume.
exactly,
So
right,
It
right,
has
and
to
they-
be multiple
yeah.
days.
So then, like, to say that a firm is done selling or a big player is done selling just because the stock bounces, I think could be right if you can prove it. But if you can't prove it, to me, it's just like an arbitrary reason to pick up more size. And that's not like on you. Like I used to do this all the time.
No. I agree what you're saying. I'm just saying I'm trading this moment only. Like they might sell later, they might sell right now, but based on what I am trading right now in these next 4 or 5 minutes, I need a seller. And if they done selling, then my thesis is not working anymore
Right.
because I don't have the seller with me.
Right.
So I'm not saying they are done selling. I'm just saying if they are done selling for now, then I don't have a seller with me and I don't have that much signs to move the market. So that's why I'm wrong because they wanted to sell here, they will
Okay.
want to sell here more.
Yeah, I understand.
Does that make sense?
Yeah, yeah.
For now, I'm trading
No, that
now.
makes sense. Yeah, that's cool.
Yeah, I got filled and here we kind of consolidate. Okay, so here I'm thinking we spend 1, 2, 3, 4, 6 minutes in that range. And if you break the lows and if you break with a good selling pressure, and if you continue, I want to be more sized. I want to be sized in because the trade is working. I don't want to be just from that execution. And right here, I added.
Because you think it's gonna break.
Yeah, for continuation and the way we trade, I'm like, okay, first leg, consolidation, and for the second range, I'm adding here because the way we came down. Actually, I don't add here. You see that 370 is holding?
You're adding here.
No, not here. I'm like on the tape, the 370 is up right here. Yeah, I took immediate. I think I took 369.50. As soon as we get out, I hit it and then immediate rebit.
And then you get out here.
No,
don't get
I
out.
did not. Because if I get out there and if it goes back, then I'm in my head. I had a decision. I rather just stick with decision. I hit it, it's gonna break.
So you got. Okay, this is where I'm gonna push back. One, like I don't know. I don't love those bids like this, but if you are gonna execute on like a bid like that,
Yeah.
then your thesis is that 370 offer, like we're gonna break that. It's significant. You're expecting momentum.
Yeah.
You didn't get momentum, so then you're wrong.
I am wrong and I should have got it. Yeah. I agree. I agree with that. I don't really have anything against to say it. I think in that moment what I'm thinking is I got my first execution right here and I have a risk. And right here, okay, it's working. I can put more size. If it comes back to me, sure, I can still have my risk level above 375 because I want in more with a size. But looking back, that was wrong. I should have, because if I'm hitting below 370, just get out because there is a possibility it can come up to 373.
It could go 380. It could go anywhere.
380, yeah. So, yeah.
I mean, there's also a possibility that you're right, where it goes back down, like it just wicks you out.
Yeah.
But if your thesis is 69 holding lower, then I think it has to hold lower. Like, it's just
Yeah.
about like that's what that trade is.
I think the second thing that I was talking to Jeff about this, like right here, I was really specific and very determined. What do I want? What do I need to see? Right here, I wasn't as specific as I wanted. Okay, it's working. I want to add. I think the mistake that I did, if I will be more specific, I will tell myself, okay, 370 break. If it doesn't hold, I'm taking this lot out. I'm gonna take small loss, but I still have my core position.
Yeah.
Yeah, I need to be more specific there. I mean, after this, it's really just rebits here a little bit, and then we just faded. That was the tape that I wanted to show. So this is the trade management. I show my executions and each of them in a reason. So the first one, as I explained, if it's going to trend down, I need to execute at the top of the range and add into low of the day break. My second execution, I added the break for continuation. The third execution that I was talking about, I wanted to cover because I took my lesson from that, the first break. This is also very speculative. This was really just a trading decision that I made just for the specific moments. I don't know if I wouldn't do this all the time, just cover into low like that, but just realizing how spread it is, and I don't really need to hit those beats in a like 40-50 cent ranges. So what I did is I didn't immediately cover it. So we try to break, I shorted the lows and then come back range, and then when we broke again, I'm gonna are we gonna break or if we gonna rebit? If we rebit, that's why I immediately covered. Okay, I'm not gonna put myself in the position again. So what I should have done in the first break, I did that in the second break. I covered if it's not gonna hold. So it didn't hold. We get the rebit action. I covered, and after 40 cent, I reshorted. To me, that was like okay, because that was almost like a $2 bounce, and I'm like okay. This was that slight pop that I wanted because I couldn't really judge how much it's gonna go. So that was right here.
And then does that have a stop independently?
This one?
Yeah.
No, I'm still holding.
So
like,
then
I
if
added
it
the
goes
top.
higher, you short more?
No, after this, my stop is right here, 372. This one I didn't have really specific because we were so new in the trade. Right here, we had another level where buyers and sellers fought. So if I'm adding here above 372, I'm wrong because I don't want to give up too much because we are also time is also passing by and the volume is like the people want to get out, getting out, people want to buy, they are getting in. So my new risk is right here. I agree, it can weak me out and come back in, but that's still like the risk I'm taking. Like that's just part of trading. My probability, if it's gonna trend down, I want to be more sized. Do I have to add here? No, I can just hold my size and my probability will be more higher. But I want to be sized in if it's gonna work on my favor. And here we take another break. I wait again to $2, $3 pops, and this is my last pop short. And again, $3 pop. Throughout the day, I didn't see any reason to cover. If you're just fading and the small pops, I don't want to take advantage of. If you are popping, I just short more. The idea that you told me, why not short more? I agree. I just wanted to use that. If it's working on my favor, then I can short more if it's going high, but not high against me. Just high in the moment just gives me a reason to like add. That's why I like to think in that way.
Yeah.
And right here, I covered and I have a reason to cover slide after this.
Yeah, I mean, I just think probably I'm just not the best person to give you advice on this.
Yeah.
Because I just trade so differently. Not
Yeah.
saying like this is like like your way is worse
Yeah,
than
yeah,
my way.
yeah.
Like
Yeah.
not at all, right?
Mhm.
There's traders who are far bigger than I am,
Yeah.
far better traders than I am that trade
Yeah.
in a way, like a similar way
Yeah.
that like there's a lot of decisions throughout a day.
Yeah.
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 I mean, I just don't trade this.
No, I think I agree. Like the stuff that we talk, like the probability, what if it goes high, you short more. I like me personally, these type of trades happens like rarely, but once they happen, I want to be sized in because most of the time, if it lose, yeah, lose small, but I just wanted to size in if it's really working for me. So this is my recent cover slide. So we were trading for 5x our wall, and we already passed that reboot area. So right here, that was the last time stock stopped and we gapped up the next day. So I am participating right here. Okay, I have intraday buyers who's trying to take the longs, and then I have those buyers there. And we already moved 2 ATR, and I'm in a good spot that I'm up enough in the day that my target is reached. And given those reasons, I'm like, okay. And also the day we are really far on the day, and that was low of the range. So all of those together, that gave me a reason to cover. Another look that I was trying to get, this one is more speculative, but I really liked when I was scroll through the daily. Whenever we had those high volume, those intraday moves, we tend to continue or like cover near lows. That's why I highlighted those. Even if you look at the green bars, the stock nature, the way it was trading, that I'm like, okay, I can expect this given the ATR, given the volume. So those were my reason to cover. So my trade review, the 3 takeaway that I took: embrace discomfort on an entry. Don't wait for too obvious. The idea should be obvious, but the execution should be not obvious. It should be somewhere that EV is high, and I'm willing to take the size in there, and trade around the range that I said. Like the stock nature is different. Not every stock trades differently because I was trading too much high beta names. I really expected like, okay, it's a momentum trade, flush into lows. It's not. It's a high spread stock. It's really trading range. I could have do way better if I cover near lows and short more into pops, which is speculative. I never know if I'm gonna get pop or not. But what happened, that was important. Be more patient. I could have learned better because I didn't need to really add into the super breaks. I mean, sometimes I do need to, but I need to do better tape skills to, like, if it's not working, do I need to get out immediately, that immediate action that I needed to take, that I need to work on. What I learned from that trade, like I said, I heard Shark talking about that multiple times, and Lance talks about the EV, like, where am I more better off on a trade? And like, I listen to those stuff, but like, I really don't execute on it or like really get the idea to like really properly put on it. This was one of those times that like I really thought about it before I was entering in a trade, and seeing in the first time, okay, that's where I need to enter. I think I did a good job on it. And next time, what I will do better is really being more specific on every entry, not just on my first entry, because it kind of gives you a comfort that if it's working, you just add. Being more specific, that I will do better job on it. Beside that, yeah, I think that was it.
Sweet. Awesome, man. Yeah, I mean, like, I will say, like, this is what I think. Like, I think honest answer is you're working on really cool stuff. Like, you're thinking about the right things.
Yeah.
I think, like, for where you are in your career, like, you're totally fine.
Yeah.
I mean, like, I work late hours. You are there after me, like, most of the time. So I think, like, that is probably, like, the most important thing. It's like you just, like, traders have to work stupid hours. Like, that's just the way it goes, especially when you're developing, right? So I think as long as you continue that and you're doing work that is, like, difficult, right? A lot of people do work that is, like, oh, like, have you heard of Cal Newport?
Cal Newport?
Yeah, Drew, someone at the firm, showed it to me, someone on my team. But he has this book called Deep Work, and basically in that book he talks about how there is a difference between, like, work where you're entirely focused and, like, where you derive tons of value, and we don't get many of those, right? As a society, like, we're filled with distractions. We like, it's so easy for people to go to work and do, like, the shallow stuff. And shallow meaning, like, I can sit at my desk and quickly think of, like, oh, I need to do this. Let me input this database, right? And it's important to do that work, but it's also, like, how much are you doing like the deep work that is difficult, where like when you break it down, it's like I have to be completely focused. I'm learning a concept, I'm conceptualizing. It's hard to understand. Like I have to do like research. If I even see a notification that pops up or something like distracts me, like completely lose my train of thought.
Yeah.
You know what I'm talking about, right? Like that's where it's like gets really hard. If you focus on doing that every day, I think like you're gonna be fine.
Yeah, no, that I try to do that, and just I work on more being specific. Like right now, I'm working on my like entries and the probabilities over time. If I keep taking the same, do I end up being profitable or not? Which is like you said, I really have to be focused on those small things.
Yeah.
And what you said when you were intern, that you said if you take this over and over, at the end you will end up being profitable.
Yeah.
So that's what I'm working on right now, just finding a system rather than trading. Like you said, this is like, it's so different. You can't just keep judging based on your feeling, because market is gonna beat you, market maker is
Yeah.
gonna beat you. But if I have a system,
Yeah.
that's what I'm working on right now.
Yeah, I completely agree.
All right.
Awesome.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.